Good morning, ladies and gentlemen. Welcome to Sustainable Finance Webinar, Principles, Market, and Implementations. We are pleased to have participants and speakers joining us from different backgrounds and perspectives. This webinar is hosted by the UN Global Compact Network Indonesia and UN Global Compact Network Singapore as part of our upcoming Sustainable Finance Leadership Program. Assalamualaikum warahmatullahi wabarakatuh. Selamat pagi, Bapak dan Ibu sekalian. Terima kasih telah hadir dalam Sustainable Finance Webinar, Principles, Markets, and Implementation. Acara ini diselenggarakan oleh UN Global Compact Network Indonesia bersama UN Global Compact Network Singapore yang juga bertujuan untuk memperkenalkan Sustainable Finance Leadership Program. Yang kami hormati Bapak Agus Firmansyah, Kepala Departemen Surveillance dan Kebijakan Sektor Jasa Keuangan Terintegrasi dari Otoritas Jasa Keuangan, Bapak Yewe Junardi, Presiden dari UN Global Compact Network Indonesia, David Fogarty, CEO dan Executive Director dari UN Global Compact Network Singapore, Shivani Gulati, VP of Sustainable Finance dari Impact Investment Exchange, Dr. Joanna Q, Head of Sustainability dari Eastspring Investments Singapore, serta seluruh peserta yang telah hadir pada hari ini. My name is Mita Listia, Manager of IGCN Academy, and I will be your Master of Ceremony for today. Ladies and gentlemen, this session will be conducted both in Indonesian and English. There will be also guides on how to turn on auto translations on the chat box. If you have any questions during the session, you may share them through Q&A feature in the Zoom. Untuk membuka acara pada pagi hari ini, kami ingin mengundang Bapak Yewe Junardi, Presiden dari UN Global Compact Network Indonesia untuk memberikan kata sambutan. Kepada Bapak Junardi, kami persilakan.
Terima kasih, Mita. Distinguished speakers, colleagues, ladies and gentlemen, good morning. My name is Junardi. I'm the President of United Nations Global Compact Indonesia. On behalf of this UN Global Compact Network Indonesia, I'm very pleased to welcome you all to today's Business Finance webinar on Principles, Markets, and Implementation. First of all, allow me to express my sincere thanks again to the UN Global Compact Network Singapore for the collaboration in organizing this webinar, and to all participants and partners who have joined us today. This collaboration reflects our shared commitment to strengthening the regional cooperations and advancing responsible business practices in support of the Sustainable Development Goals. It is also my pleasure to recognize again once more our distinguished speakers today. We are very honored to have Pak David Fogarty, CEO and Executive Directors of the UN Global Compact Network Singapore, who will deliver the opening remarks. We are also privileged to welcome Bapak Agus Firmansyah, Head of the Department of Surveillance and Integrated Financial Policy of the Financial Service Authority (OJK), who will also deliver the keynote address and share important perspective from this regulatory side. Also grateful to have Dr. Joanna Q, the Head of Sustainability at Eastspring Investments, and Mrs. also Shivani Gulati, Vice President of the Sustainable Finance at the Impact Investment Exchange, who will share the available insights from the market and the implementation perspective. Ladies and gentlemen, allow me now to switch in bahasa. Bapak dan Ibu yang saya hormati, Sustainable Finance saat ini telah menjadi salah satu instrumen penting dalam menjawab berbagai tantangan global, termasuk perubahan iklim, degradasi lingkungan, ketimpangan sosial, serta kebutuhan untuk membangun ekonomi yang lebih inklusif dan tangguh. Pada dasarnya, sustainable finance pada saat ini adalah tentang bagaimana kita mengarahkan pembiayaan dan investasi kepada kegiatan yang tidak hanya menghasilkan nilai ekonomi jangka pendek, tapi juga memberikan manfaat sosial dan lingkungan dalam jangka panjang. Hal ini sangat sejalan dengan misi United Nations Global Compact, 10 prinsip UN Global Compact yang mencakup hak asasi manusia, ketenagakerjaan, lingkungan, dan anti korupsi untuk memberikan fondasi penting bagi praktek bisnis yang beretika dan bertanggung jawab. Sustainable finance menjadi salah satu cara untuk menerjemahkan prinsip-prinsip tersebut dalam keputusan investasi, strategi perusahaan, manajemen risiko, dan penciptaan dampak yang terukur. Dan di Indonesia, perkembangan sustainable finance telah didorong secara kuat oleh regulator, khususnya OJK, melalui berbagai kerangka kebijakan penting, terutama termasuk POJK nomor 51 tahun 2017 dan taksonomi keuangan berkelanjutan Indonesia. Kerangka ini telah membantu mendorong integrasi ESG dari yang sebelumnya lebih banyak dipandang sebagai inisiatif sukarela menjadi bagian yang semakin penting dalam tata kelola, pelaporan, dan pengambilan keputusan di lembaga keuangan maupun perusahaan. Kita juga melihat berkembangnya berbagai instrumen sustainable finance seperti green bonds, sustainable bonds, dan sustainable link bond, dan sebagainya. Instrumen ini penting karena menghubungkan pembiayaan dengan tujuan keberlanjutan yang lebih luas dan hasil lebih terukur. Namun demikian, implementasi masih mendapatkan tantangan. Masih terdapat kesenjangan antara kerangka kebijakan dan praktek di lapangan, khususnya dalam mengintegrasikan aspek ESG ke dalam pengambilan keputusan, financial, penilaian risiko, pengembangan produk, dan pengukuran dampak. Karena itu, webinar ini menjadi sangat relevan karena kita akan mendengarkan perspektif dari sisi regulasi, pasar, praktek implementasi. Webinar ini juga akan menjadi ruang dialog antara regulator, pelaku usaha, investor, lembaga keuangan, dan semua bapak-bapak yang hadir dan ibu yang hadir pada hari ini. Selain itu juga pada kesempatan ini webinar akan memperkenalkan Sustainable Finance Leadership Program yang akan diselenggarakan pada tanggal 3 dan sampai 4 Juni 2026 yang akan datang. Dan kami mengharapkan program ini dapat memperkuat kapasitas para peserta untuk tidak hanya memahami prinsip-prinsip sustainable finance, tapi juga menerapkannya secara lebih efektif di institusi masing-masing. Bapak dan Ibu yang saya hormati, percepatan sustainable finance tidak dapat dilakukan oleh satu pihak saja. Hal ini membutuhkan kolaborasi lintas sektor serta aksi nyata untuk memastikan bahwa komitmen keberlanjutan benar-benar diterjemahkan ke dalam keputusan bisnis, keputusan investasi, dan dampak yang dapat dirasakan oleh masyarakat dan lingkungan. Saya berharap diskusi hari ini dapat memberikan wawasan yang bermanfaat, panduan yang praktis, serta semangat baru bagi kita semua untuk memperkuat sustainable finance sebagai pendorong bisnis yang berlangsung bertanggung jawab, pertumbuhan yang inklusif, dan keberlanjutan jangka panjang. So with that, I would like to once again thank you all, our distinguished speakers, partners, and participants. And I wish you all a productive meeting and inspiring webinar. Thank you very much.
Terima kasih Bapak Junardi atas sambutan yang telah diberikan. Mr. Junardi highlights many important aspects, and one of them is the importance of cross-sector collaborations and concrete action to ensure that sustainability commitments are truly translated into business decisions, investment decisions. Next, we are pleased to invite Mr. David Fogarty, CEO and Executive Director of the UN Global Compact Network Singapore, to deliver his opening remarks. David, the floor is yours.
Thank you, Mita, and good morning, everyone, and a very warm welcome to all our participants joining us today. So my name is David Fogarty. I'm the CEO of United Nations Global Compact Network here in Singapore. On behalf of our network in Singapore, and with great thanks and appreciation to our colleagues at the Indonesian network, it's my pleasure to share the opening of this webinar on sustainable finance, principles, markets, and implementation. We are at an inflection point. Across ASEAN, the shift to a low-carbon, inclusive economy isn't on the horizon. It's actually underway right now. And the decisions being made right now about how capital is allocated will shape the world we leave behind. Singapore is emerging as Asia's sustainable financial hub. Indonesia is scaling energy transition investment at pace. Collaboration between the UN Global Compact networks across ASEAN is essential because sustainability challenges, climate change, inequality, and financial system reform transcends borders and cannot be solved by any single country or network acting alone. Partnering with the Indonesian Global Compact Network on the sustainable finance course is particularly important because it combines cross-market expertise, accelerates the mobilization of capital towards the SDGs in one of Asia's largest growing economies, and builds a shared standard of practice that strengthens responsible finance across the entire region. And across the region, the opportunity to channel capital towards long-term resilience has never been greater, nor has the urgency, because ambition alone isn't enough. Organizations today are wrestling with the same hard questions. How do we move from principles to action? How do we navigate tightening disclosure requirements and greenwashing scrutiny? How do we transition plans that are credible and not just compliant? And that's what exactly today's session is about. Our two-day Sustainable Finance Leadership Program is designed to address these challenges. Not concepts, but capabilities, practical tools and frameworks to embed sustainable finance into real decisions. It'll equip participants with greater understanding of how sustainable finance works in practice, how to align with emerging standards and expectations, and how to implement strategies that are both commercially viable and actually impact-driven. At our network in Indonesia and in Singapore, our roles are collectively to support business and financial institutions in moving from awareness into action. And platforms like this, and through continued learning journeys, we aim to build a confidence and capability needed to drive meaningful change. So today we bring together voices from policy, investment, and implementation, because that's what real progress requires. I'm very excited at this webinar and hearing from our speakers, and for this collaboration to help us advance sustainability collectively. A huge thank you to our colleagues and friends at the Indonesian Network for this opportunity to speak today. Thank you very much.
Thank you, David, for your remarks. David menyebutkan poin penting bahwa memang saat ini kita berada di titik menuju perubahan, bahwa peralihan menuju ekonomi rendah karbon dan inklusif itu sedang berlangsung di ASEAN, maka keputusan yang dibuat saat ini tentang bagaimana modal dialokasikan akan berpengaruh besar untuk menentukan masa depan dari transisi ini. Thank you, David. Ladies and gentlemen, we will now move on to the keynote session, which will explore regulatory perspectives on sustainable finance in Indonesia. Bapak dan Ibu sekalian, kita akan memasuki sesi keynote yang akan membahas perspektif regulasi terkait sustainable finance di Indonesia. Untuk itu, kami mengundang Bapak Agus Firmansyah, Kepala Departemen Surveillance dan Kebijakan Sektor Jasa Keuangan Terintegrasi dari Otoritas Jasa Keuangan. Kepada Bapak Agus, kami persilakan.
Thank you, Ms. Mita. Good morning to distinguished speakers and webinar organizers, and also distinguished participants. Assalamualaikum warahmatullahi wabarakatuh. Greetings of peace and prosperity to us all. Distinguished speakers and webinar organizers, Mr. Yewe Junardi, President of UN Global Compact Network Indonesia, Mr. Andi P. Rahim, Interim Executive Director of UN Global Compact Network Indonesia, Mr. David Fogarty, CEO and Executive Director of UN Global Compact Network Singapore, Ms. Sifani Gulati, Vice President of Sustainable Finance at Impact Investment Exchange, Dr. Joanne Q, Head of Sustainability at Eastspring Investments, and distinguished participants joining us today. Good morning. First of all, allow me to express my appreciation to all organizers, speakers, and participants who tirelessly contributing to advancing sustainable finance implementation both in Indonesia and globally. Distinguished ladies and gentlemen, today we are at an important turning point. where sustainability is no longer viewed as an additional agenda, but has become a key factor influencing investment flows, economic competitiveness, and the resilience of the global financial system. Climate change, transition risks, geopolitical uncertainty, and changing investor preferences have fundamentally transformed how financial institutions assess both risks and opportunities. Therefore, sustainable finance is no longer merely an environmental agenda. It has become a strategic imperative to safeguard financial system stability, strengthen national economic competitiveness, and ensure the future growth remains resilient, inclusive, and relevant. Indonesia is one of the countries that has demonstrated a strong commitment towards sustainable development through various strategic initiatives, including the ratification of the Paris Agreement, the implementation of our nationally determined contribution or NDC, the advancement of sustainability development goals or SDGs, as well as the strengthening of sustainable finance mandates under the Financial Sector Development and Strengthening Law, or known as Undang-Undang P2SK or P2SK Law. All of these commitments serve as an important foundation in building a financial system capable of supporting Indonesia's transition toward a more inclusive, low carbon, and sustainable economy. Distinguished ladies and gentlemen, in supporting this agenda, the Financial Services Authority of Indonesia, or OJK, continues to undertake strategic measures to build a sustainable finance ecosystem that is credible, interoperable, and implementable. One of the key foundations that we have developed is the Indonesia Taxonomy for Sustainable Finance, or TKBI. TKBI serves as a national reference framework for classifying sustainable economic activities, while also strengthening the credibility of green financing and minimizing the risk of greenwashing. With its science-based and interoperable approach, TKBI is expected to support greater capital allocation toward priority sectors such as clean energy, low-emission transportation, sustainable agriculture, green building, and waste management. Currently, OJK is also conducting pilot implementation of TKBI reporting across all commercial banks to support sustainability assessment of debtors' business activities. In addition, OJK has introduced various regulations and roadmaps to strengthen sustainable finance implementation across the financial sector, including governance enhancement, climate-related risk management, and sustainable financing instruments. Distinguished ladies and gentlemen, at the same time, global sustainability disclosure standards continue to evolve rapidly. The issuance of IFRS S1 and IFRS S2 by the International Sustainability Standard Board, or ISSB, marks a major milestone in strengthening sustainability-related disclosure globally. Indonesia has also adopted this standard through the Sustainability Disclosure Standard, namely PSPK1 and PSPK2, issued by the Indonesian Institute of Accountants. This development demonstrates that transparency and integrity in sustainability disclosure will become fundamental pillars in maintaining market confidence going forward. For this reason, OJK considers it necessary to enhance OJK Regulation Number 51, year of 2017, to align with evolving global standards as well as domestic needs. The enhancement of this regulation is intended to improve the quality and credibility of sustainability reporting, strengthen governance and climate risk management integration, and minimize potential greenwashing practices. Going forward, this framework is also expected to serve as a cross-sector regulatory umbrella for sustainable finance implementation in Indonesia, while facilitating the adoption of future global disclosure development. including climate and nature-related disclosure. Distinguished ladies and gentlemen, however, the success of sustainability finance in Indonesia cannot rely solely on regulation. Financial institutions of the future will not only be expected to manage risks, but also to finance economic transition in a credible and measurable manner. Therefore, OJK continues to prepare various bridging policies to ensure that industry is ready, including strengthening climate risk management, developing transition finance framework, digitalizing sustainability reporting, integrating green portfolio and emissions data, as well as enhancing capacity building across the financial sector. In terms of national coordination, the establishment of the Sustainable Finance Committee, as mandated by Undang-Undang P2SK or P2SK law, is expected to strengthen synergy among OJK, Bank Indonesia, and the government in building a more effective and integrated transition financing ecosystem. In addition, OJK continuously to actively support the development of Indonesia's carbon economic system, including through the development of the so-called Carbon Unit Registry System or SRUK, SRUK, and support the transition financing and environmental restoration initiative. We call it Program Satu Karsa or One Will program. Distinguished ladies and gentlemen, the transition toward a low carbon economy is not only a challenge, but also a significant financing and investment opportunity for Indonesia's financial sector. With its vast green economic potential, Indonesia has the opportunity to become one of the key sustainable investment growth centers in the region. Maybe not only in the region, but also globally. However, this opportunity can only be realized if we are able to build an ecosystem that is credible, transparent, and trusted by global markets. Because ultimately, the success of sustainable finance will not only depend on the quality of regulations, but also on our ability to build collaboration, integrity, and trust. To close my keynotes, I would like to thank all participants once again and wish you a productive and insightful webinar. I hope today's discussion will contribute meaningfully to the strengthening sustainable finance implementation in Indonesia. Let us continue to strengthen collaboration and synergy in building a financial system that is more resilient, inclusive, and sustainable. Because sustainable finance is not only about financing the future, but also securing the future for our future generation. Thank you. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Terima kasih banyak Pak Agus atas pemaparan yang sangat komprehensif mengenai arah dan perkembangan regulasi dari sustainable finance di Indonesia. Jadi tadi Pak Agus juga meng-highlight ya bahwa keuangan berkelanjutan kini menjadi kunci untuk memungkinkan pembangunan berkelanjutan yang resilient dan juga inklusif. Standar pengungkapan atau global disclosure framework secara internasional memang menjadi fundamental. Namun suksesnya keuangan berkelanjutan di Indonesia itu tidak bisa bergantung hanya pada regulasi. Maka dari itu OJK juga mempersiapkan banyak bridging untuk menutup gap antara regulasi dan implementasi. Thank you very much Pak Agus for the keynote speech. Now to continue, we will now move on to the market perspective, particularly how market players are aligning with regulatory requirements. Please welcome Ms. Shivani Gulati, Vice President of Sustainable Finance at Impact Investment Exchange. Shivani, over to you.
Thank you, Nita. Good morning, everyone, distinguished panelists and enthusiastic participants. Looking across the room today, I see something that tells me exactly why Indonesia is at an inflection point. Over 44% of you are from non-financial corporates, 14% are from NGOs and civil society, and 11% are from financial institutions. This is not a problem, but a market signal that the future of sustainable finance in Indonesia will not be built by banks alone. It will be built by all of you, the companies that issue bonds, the organizations that track impact on the ground, the government bodies that are creating enabling infrastructure, and financial institutions that are rising to the needs of golden Indonesia. This is the foundation of orange capital markets. I want to start today with a number that will stay with us beyond this webinar: a 12 times oversubscription. Last year, PT-PNM issued Indonesia's first orange bond and the world's first orange sukuk, demonstrating unparalleled commitment to gender equality and climate resilience. This tranche in 2025 received massive interest at 12 times the original book. In a global market where thematic bond transactions have been consistently delayed, deferred, or repriced, this is a figure that will stop you in your tracks and tell us that Indonesian markets are ready and moving from green to orange. I'm aligned with David in that we need to talk about transactions that build over these principles. And this is exactly what I want to share with you all today. Not the vision, but the evidence of where the investor appetite is moving and why. In Indonesia, as we heard from a local bank recently, despite genuine intent to expand thematic issuances, a significant number of transactions have been pushed back. This is not because of a lack of interest, but because global investor pricing expectations have shifted, and the domestic cost of capital is not catching up as quickly. Now, this is not a uniquely Indonesian problem, but one that we are seeing across markets due to the geopolitical climate and the anti-ESG headwinds. We are also seeing that climate finance globally is demanded to be more inclusive. Data supports this. The overwhelming majority of green and sustainability bond proceeds flow to infrastructure, energy grids, transport, buildings, but not to the communities that are most exposed to climate risk. These are women, rural MSMEs, informal sector workers. These populations bear the most climate vulnerability and are systematically underserved by the instruments designed to serve them. This is a structural feature of how the global thematic bond market has developed over the years. However, orange, which is the color of SDG 5, gender equality, sits right within Indonesia's sustainable finance landscape and ties structural incentives to people that actually are bearing the most climate risk. When we studied Indonesia's landscape during a feasibility study for Ford Foundation, the evidence was very clear. There were already existing incentive structures that were supporting green, social, and sustainable issuances. Green bonds carried OJK-approved registration fee discounts and IDX listing discounts. This meant fast-track approvals and index eligibility. Where orange came in was directly here, but connecting this intention to communities that Indonesia's own development agenda is built around. The orange bond and sukuk principles are designed as an overlay. They are not a competing standard, but a gender intentional layer that sits on top of existing regulations and frameworks. So issuers do not need to build from scratch. They extend what they already have and go deeper in their commitment to intentional impact. This reduces their cost of entry, and it also means that any sector with a credible gender impact, be it microfinance, agri-value chains, digital inclusion, or healthcare, can access the same pools of capital that have historically been reserved for infrastructure deals. What PNM's issuance did was demonstrated this in action. And this is worth putting in historical context, because the pattern is one Indonesia has seen before. When Indonesia issued its first sovereign green sukuk in 2018, a whooping USD 1.25 billion issuance, it was oversubscribed 3.8 times. It did not just raise capital, it created a pricing benchmark. It demonstrated regulatory workability. It gave corporate issuers a template to follow, and within 2 years, the corporate green bond market had its first non-sovereign issuance as well. Within 5 years, this grew fivefold. The first sovereign mover created the conditions for the private sector to replicate and scale the market. PNM's orange bond and sukuk intends to do the same thing for gender lens issuances. Independently verified by IIX against the orange bond and sukuk principles, 100% of proceeds were ring-fenced for the Mekar and Mekar Saraya programs, group lending to more than 14 million women entrepreneurs living below the poverty line. This is OJK-approved IDX listed issuances. What PNM proved is that the demand exists, the regulatory pathway exists, and the instrument design works. The same demonstration effect is what built the green bond market in Indonesia, a leader in sustainable finance. And now we are following a corporate replication that is following this credible first mover, an ecosystem that treats gender lens instruments as a standard asset class rather than an experiment. When we look at what the investors are asking for, one thing is clear. All 2025 orange bonds were oversubscribed across the world. This is not a coincidence, but a clear intention of Orange to infuse transparency in a market. What brought investors to the table was not the intentional market infrastructure that makes climate financing more inclusive, but also the strong underlying layer of last mile verification. After layers of greenwashing scandals in global ESG markets, sophisticated investors are now developing a low tolerance for vague commitments. The orange label dares issuers to go beyond in their reporting commitments. They want the label to provide them with a documented, audited trail of impact from their transactions, directly from the women that they are financing. Secondly, investors are increasingly looking at the ecosystem around a transaction and not just the transaction itself. They wish to know, is this instrument connected to a reporting framework? Does it have index eligibility and applicability within the local regulatory framework? Are there comparable transactions that we can benchmark this against, both locally and globally? So, which means that an isolated green bond project with a boilerplate standard sustainability report is a very different risk profile from an orange bond that is connected to OJK's disclosure requirements, IDX listing, and a verified impact measurement platform, along with pipeline of comparable future issuances. This is exactly what we're building now in the market, and where the integration of orange principles into Indonesia's SDG government securities framework matter beyond the symbolicism. It creates the infrastructure that allows investors to treat orange as an asset class rather than a one-time transaction. And there is a global pool of capital that is growing significantly looking for this. ESG-conscious institutional investors are increasing their emerging market allocation. Islamic sovereign wealth funds are actively seeking instruments that align gender equality with Sharia compliance, a combination that almost nothing else in global markets currently offers except the orange sukuk. Indonesia is thus a fertile ground for the next wave of inclusive climate financing, given orange market linkages with OJK and Bappenas's sustainable finance agenda, and the power of entire communities that are being represented front and center of investment decision making. Now, you must be wondering, what are these instruments and how do they work? How are they different from others in the market? Well, for the non-financial companies here and civil society organizations, you are the majority here, so let us make this more concrete and not theoretical. An orange bond is structurally identical to a conventional thematic corporate bond. The difference here is 3 additional layers that align with the orange principles. The first is that the proceeds go to activities that disproportionately impact women and girls. The second, the governance team responsible for this transaction must also demonstrate meaningful representation of women so that the lived realities are adequately represented in your financing. And third, the issuer commits to gender disaggregated data and annual independent impact verification at the last mile. This is what truly sets Orange apart and goes deeper than the green, social, and sustainable commitments. And Orange Sukuk applies the very same principles in a Sharia-compliant structures. PNM's Orange Sukuk, which is the world's first, channels capital specifically to Mekak Sharia, which is structured in compliance with the DSN MUI fatwas. It is simultaneously a corporate marketable instrument, an ESG instrument, and a Sharia-compliant instrument. The triple positioning is what makes it so attractive to investor pools that do not typically intersecting. This design principle for both instruments in Orange is not an overlay. It's already organizations working within a green and sustainability framework that go deeper than that. This is how it worked with PNM as well. On eligible sectors, the conversations tend to default to microfinancing because PNM is a visible example. But I'm here to assure you that the OBP eligible categories are deliberately broad. This can involve consumer goods companies with women-dominated supply chains, digital service providers that reach women in underserved provinces, agriculture value chains where women represent majority of workforce, or healthcare, education, climate-resilient housing and infrastructure. Any sector where you can credibly demonstrate that proceeds are reaching women at a disproportionate rate, and where you can measure and report on that outcome, it can be orange. One practical note on the impact measurement piece. IX Values was built specifically for this purpose during the COVID era, a technology platform that conducts impact confirmation directly with the women through their mobiles in their local languages. The power of local languages for these women means their voices are being heard by people that are funding them right from the capital markets, which is an extremely powerful signal. This is not the only way to do impact verification for an orange bond, but is a method that we have tried and tested over the years, and that has held up scrutiny from international institutional investors across 7 WLB issuances that perfected this as well. In this way, orange is sophisticated, but yet it has a global applicability, operating at the very intersection of international best practices and local disclosure requirements. I'd like to highlight that Indonesia is not a test case for us. It is one of our most active markets. We have been here lending through the ecosystem, working alongside OJK, IDX, Bapenas to build capacity and knowledge of financial institutions and regulators, and developing the guardrails of impact verification that make those instruments credible to international investors. Through the IX WLB, the Women's Livelihood Bond Series, we have invested and mobilized over 50 million in the country, again, testing these very guardrails to make it more effective for other issuers to come in, such as PNM and many more that we are seeing now in the market. We've positively impacted over 21 million lives, half of which are women. We bring deep market expertise and direct relationships with global investors, understanding exactly what they're looking for in emerging markets and positioning Indonesia as a frontrunner in sustainable finance perspective for them. These are the kind of investors that are looking for the kind of pipeline that Indonesia already has. Our feasibility for the Indonesian Orange Bond was not just a theoretical exercise. It was built on these relationships and the data that we have for the last 15 years of learning what actually works when you try to get capital to the last mile in Indonesia. And of course, it led to PNM's landmark issuance, the world's first Orange Sukuk and Indonesia's first Orange Bond, 12 times subscribed, ID AAA rated, and now a benchmark that every institution in this room can point to when making the case internally for why this is worth pursuing. So proof of concept is done. The regulatory pathway is open. The investor appetite is real, documented, and growing. Orange grew by 30% in the first quarter, even while GSS, or Green Social Sustainable labels, lagged by 25%. The question now that I leave you with is replication. This replication at a different scale and across a different range of issuers than PNM. Your organization, a non-financial corporate, or a not-for-profit, or a government-owned entity, can make this happen as well. Mid-market companies, Islamic financial institutions, fintech platforms, agri-value chain businesses, Orange can work for you. Any organization in this room that reaches women at the last mile and channels financing to it with a bolder commitment to go above and beyond, join us in the global scale. We are hopeful that the cost and complexity of entry goes down, as it will, as the ecosystem matures and the second-party opinion infrastructure develops around it, with more players coming in to subsidize the regulatory pathways and connect it to gender lens instruments. We know the pipeline is there because we have been sitting inside it for the last 15 years. We are already working on our next set of issuances. So if you're thinking about what this looks like for your organization, whether you're a potential issuer, an investor, and someone who works on the regulatory and standard size, we are here and we're happy to have that conversation today after this session or wherever you are. Thank you.
Thank you, Shivani, for sharing those valuable insights. So Shivani mentioned that Orange Bone is already entered the Indonesian market, and it focuses on the programs on the women's empowerment, gender equality, and climate change. And if the participants want to learn more, feel free to ask the questions in the Q&A box. We will now apologize for the video errors. We will now move on to our next session, which will focus on translating these frameworks into practice. Please welcome Dr. Joanna Q, Head of Sustainability at Eastspring Investments. Dr. Joanna, the floor is yours.
Thank you, Mita. And thank you everyone for dialing in and for this opportunity to be able to speak to you today. The previous speakers have all put out a very colorful, very interesting and timely speech, each all talking about areas of which sustainable finance and investment are still very much alive today. From the Indonesia regulatory perspective to impact investing, to markets, as well as to how the real world is reacting to sustainable finance. So my session of this talk today, we'll talk a little bit more about the UN Global Compact's participation in this space, and also about the 2-day advanced training in sustainable finance leadership that will happen actually in Jakarta itself early next month. So some of you on the call will be wondering, like, what are the latest and what kind of information in sustainable finance and investing would be essential for the day-to-day jobs of people in the real economy, in companies, in investment firms, in asset ownership, and in regulators throughout the world. So actually, sustainable finance is something, as the previous speakers have alluded to, and which I would like to talk a little bit more about, that is very relevant today. So some of you in the room may have heard things like the pullback in sustainable finance, especially led by the United States, for example, drawing out of the Paris Agreement, things like greenwashing, terms like ESG backlash, that have been more prevalent in the recent years. And maybe some of you who are maybe in the sustainable finance field itself may have heard from colleagues saying that is sustainable finance, are their days numbered? Is it over? But in the midst of this kind of turbulence, we are also seeing other kinds of tailwinds, like Europe, although it may look like they are relooking regulations under the EU Sustainability Omnibus, but a lot of these under the hood trajectories show that regulations are actually here to stay. And what's been happening is not a backtrack, but actually more of a consolidation and refinement of how sustainability can be more accurately positioned into businesses, markets, and market making today. A lot of this is very much alive. And in Asia, we're not seeing any pullback in terms of national agendas, national will. And Shivani already has alluded to orange bonds impact that has been growing in Indonesia. Our previous speaker, Agus, also has been alluding to a strengthening of sustainability regulations. And on that has also been strengthening throughout many other countries in Asia, from areas of disclosure as well as financing, and even in frontier transition areas like coal decarbonization. So if we go to the second slide of this presentation, I would like to touch on some of the driving forces that will be explored upon in this 2-day course, and what this actually means on the ground to companies, corporates, and countries. So we'll explore a bit on understanding how these driving forces in both the macroeconomic and geopolitical space, the regulatory space, and the financial market space drive real action or real outcomes that investors and companies have to navigate today on the ground. And a lot of these are very current and very evolving challenges, and it's not like something theoretical. Like, for example, it's not like learning a framework or a disclosure approach and then studying it academically and applying it mechanically. Sustainable finance has matured to a point where it is as dynamic as any other investment factor to be considered. So this also means with its continued maturity, there is no one size fits all to understanding sustainable finance. And we've got to look at it with the lens of how an investor will look at any other investment factor, fundamentally and also from a systems and strategic standpoint. So a lot of these regulations and driving forces are evolving day by day and requiring professionals to understand even more than ever now about not only what a framework or a regulation or a disclosure standard is, but understand it intimately as to its motivations and its applications in order to apply it nimbly and effectively in your context. So I'll go through some of these driving forces that are actually really live today and affecting, I believe, every one of us in different ways on the call. Again, what this course will do is to aim to summarize some of the key impacts, the legislations and history surrounding all of this, like how has it come to be, and then equip participants with the skills in order to think through like what is happening as a cause and effect of some of these driving forces. So I'll start first with outlining some of the macroeconomic driving force and something that is very relevant to us today. For example, the Iran-US war and energy security. At first glance, some people may be thinking, how is this related to sustainability? But I would say it's very much related. This war has reopened talks on what type of energy is needed, not only for a sustainable future, but also to solve the energy trilemma, which is very much a just transition problem. The energy trilemma is energy sustainability, energy stability, and also energy affordability. It's a difficult interconnected problem that both utility providers in the company, regulators, and sustainable finance and investors have to grapple with. From the perspective of the utility company, it's a business decision involving what kind of energy do I produce, what kind of energy should I think about for a future where maybe energy will be, you need to think about more inshoring and more stockpiling domestically in consideration of like global volatility. For regulators, it's about how do you create an enabling environment for that. And for investors, is how do you pick the right winners in a future that is a little bit more energy insecure? What does this mean for green energy and sustainability? Because of this war, recently we have seen very timely impacts by countries that they are either looking to increase like a bifurcation of energy approaches, either looking to increase like coal generation and simultaneously prepare for green energy for the future. So some of these very real implications cause actual budgeting impacts. Like in this slide, I put out a few, and this slide also has reading materials, by the way, at the end of it. So that's something you can refer to later. For example, in South Korea's current crisis response budget, this includes renewables expansion because green energy is something that you can produce within borders. And Japan and Philippines are actually explicitly tying renewables to energy security plans. So will we see a resurgence of green energy? And what does this mean for investors and for companies throughout the world? Green energy is also very much connected to the AI story, where data centers are energy hungry and need to look for sources that can be stable and also that supplies energy in enough quantity for data and AI consumption. This is also balanced by IT companies or even the AI companies and tech companies' sustainability goals. A lot of them have net zero commitments and also want to expand their applications in AI. So this has knockback effects on things like renewable energy certification pricing, as well as the growth of maybe even carbon markets, where we look at what kind of offsets is necessary and high quality enough for any residual emissions that are not being able to offset in the net zero commitment. So a lot of these current trends, the war, energy security, AI, have all been driven a lot and interconnected a lot by sustainability factors as well. Another type of geopolitical issue that may be happening today will be the carbon border adjustment mechanism out of Europe. This may seem like a sustainability only regulation, but not really. This also has implications for trade and green protectionism, because you are now expanding a carbon pricing beyond a region and beyond borders. So the World Bank's 2025 State of Carbon Market Report actually shows that because of a transnational carbon border adjustment mechanism that has first been instituted by the European Union, this has triggered a lot of thinking at the national level, where there are expansion of carbon pricing regimes around the world, and thought about increasing the price of a national carbon pricing regime or emission scheme to match Europe's price in order to kind of levelize the trade playing field in carbon. So the carbon border adjustment mechanism may not only be thought of as a legislation, but it is something very closely tied to a green trade impact. So these are just two of the very recent, some of the more recent geopolitical and macroeconomic factors that are happening throughout the world that have country level, corporate level, and market level real implications. If you go to regulatory trends, some of the trends out of Europe actually does have quite significant impact at a country level, and especially in Asia and Indonesia. Some of these trends that may be more relevant to any one of you on the call that are in agriculture, and especially in palm oil, which is a key industry in Indonesia and also a key export to the European Union, will have to grapple with the EU deforestation regulation. And this is a regulation that is live, has been debated, and it's still being debated, but it doesn't, to the sustainability trends today, this does not seem to be weakening as of yet. So despite any of the backlash or pullbacks that markets may be seeing in the United States, the rest of the world is starting to diverge from the United States and showing their own market patterns. How does something like the European Union deforestation regulation affect like a country like Indonesia? This actually has knockback effects on national level negotiations with the EU and company level compliance measures. So we'll see Indonesia as a country actually negotiating with the European Union on definitions for forest boundaries. The deforestation regulation, the crux of it, is to ensure that supply chains, for example, those in palm oil, are deforestation free. What does this mean? It's actually pretty technical. You will have regulators then having to decide on what are natural forests, what are protected forests, and what are forests that shouldn't be considered or can be given an exemption on a supply chain basis. A lot of technical regulations and negotiations have been going on in this area as a result, in order to help companies. So that's how the regulator comes and plays a key part, where they are trying to do government G2G negotiations to help companies navigate the impact of this regulation. At the company level, within the palm oil industry, for example, in Indonesia, companies then are taking various measures, and these have real capital consequences. And for investors looking at these companies, will also have to decide if the company is getting ready sufficiently in order to de-risk its operations to continue exporting to the European Union. What the companies are doing is realizing that they have to actually install something like traceability systems down to the polygon level in order to prove that they did not participate in deforestation within the palm oil supply chain. So this is a tricky and live conversation because under the EU deforestation regulation, certification is not sufficient proof. For example, certifications like the RSPO, Roundtable for Sustainable Palm Oil, or Indonesia's ISPO will not be enough to prove no deforestation under the EUDR. What companies need to do is to actually install a traceability system or satellite system to ensure down to the last supply chain level that no deforestation has occurred. So this caused movement of real money, investors having to relook decisions, and sustainable finance and investing still being very much alive. Because now we have to look at real market consequences, what deforestation means, what kind of technologies prove that sufficiently in the eyes of national and global regulators. Sustainable finance professionals also now have to be very attuned to how macro is moving, how regulatory risk is evolving, and have a good understanding of how this impacts your portfolio or your company's business. Another regulatory live area right now is in disclosure. And I think one of our earlier speakers, Mr. Agus, has also been referencing what Indonesia is doing in this place, Indonesia's sustainability disclosure standards, which are driven by the regulator. This has interacting effects in how global sustainability reporting trends are going. One of the key regulations is the European Union Corporate Sustainability Reporting Directive out of the European Union itself. This regulation takes different sort of financial materiality reporting to national regulations like Indonesia's SPK and ISSB around the world. The key difference is they're out of Europe, and this then affects Asian companies too, especially if they have key subsidiaries in the Europe. Because now their subsidiaries have to report under European standards, but also they have at home have to report under, for example, Indonesia standards or ISSB standards. The key difference in this is that the EU Sustainability Reporting Directive follows the European Sustainability Disclosure Standards, which is a double materiality standard. While most of the other Asian countries like Indonesia, Hong Kong, China, they follow ISSB standards, which are more of a single materiality standard. And what is the difference between these two? The single materiality standard looks at the impact of E, S, and G sustainable finance and a financial materiality lens for the company. A double materiality standard, on the other hand, under the EU CSRD and the ESRS, will take both a financial materiality and an impact materiality lens. Like, what are the material E, S, and G impacts that the company has on the ecosystem around it? So not to say which one is better or not than the other. It's just two different standards, of which the EU right now is trying to harmonize as best as possible with the ISSB single materiality standard by having their standard as probably a superset over what companies need to report under a single materiality like the ISSB standard. So this really has also knockback effects on company resourcing, reporting capabilities, and also financial professionals needing to upskill in how do you represent and report sustainable finance indicators. Lastly, some of the market impacts are things like how the world sees thermal coal exclusions. This affects capital optimization because if a company has overexposure to thermal coal revenue, they may not be able to access investment capital either from banks or investors with thermal coal exclusion stances. This also drives differences in sustainable finance taxonomies, where some taxonomies, like the Indonesian taxonomy, has domestic adjustments for how coal should be treated, whereas taxonomies like the EU Sustainable Finance Taxonomy probably has no space for coal. But here again, I'll bring you back to the understanding of balancing the energy trilemma. which is again energy sustainability, affordability, and stability, and how this plays into concept of just transition and are affecting markets today. In real time, we're actually seeing investors start to navigate the meaning of coal exclusions and start to find robust ways to think about coal financing. Of course, in a decarbonized, supported way and an impactful way as well. So this opens up a new branch of what impact means in emissions reduction. Lastly, you have things to grapple with like the sustainable finance backlash. But this isn't exactly a one-size-fits-all sign that ESG is being pulled back. It is not actually. So under this label of backlash, you actually see investors moving ESG funds out of public market track funds to segregated mandates. So they are not actually pulling back their decisions, but changing the form of their investments to something that's a bit more controllable to them. There's also rethinking about ESG risks in how the portfolio is constructed in general, how exclusions result in certain unintended tilts away from certain sectors, and what this means for returns and risk opportunities. So this is a quick brush about real and live impacts that are happening in the sustainable finance space and how that results in real impact in the country level, corporate level, and also the market level. So a lot of these will be dug into detail in the course. And if we go to the last slide, I'd like to just take a overview on how the course will look like. So the 2-day Sustainable Finance Leadership Program in partnership with IGCN and UNGC will be having the aim to have participants gain exposure to the impact of these macro, regulatory, and market drivers in sustainable finance and how this comes through in the variety of sustainable finance instruments, investment structures, and disclosure requirements needed. Participants should also appreciate the variety of sustainable financing product structures, and we'll also have some deep dive in impact investing, especially new areas like decarbonization, the impact of growing green and use of proceed bonds. And also this includes a discussion on real opportunity profiles of such strategies. The modules that will be expected in the course is shown on these slides as well, and it's pretty encompassing on the sustainable finance landscape, structures, disclosure, impact, and also real-world trade-offs that we'll need to think about as real-life sustainable finance issues evolve in real time. So thank you for your attention, and I'll stop here. Thank you very much.
Thank you, Dr. Joan Q, for covering so many global aspects of the sustainable finance. Bapak dan Ibu, kita akan memasuki sesi tanya-jawab untuk 20 menit ke depan. For participants, if you have any questions, please feel free to submit them through the Q&A box. And we already have one question in the Q&A. Let me read them. These questions can be answered by both Shivani and also Dr. Joanna. So from Yoslivia de Marchandi, we acknowledge that our company is currently facing challenging business conditions. However, we own a 20-hectare area that serves as a habitat for proboscis monkeys and other biodiversity. We have intentionally preserved the land without commercial development. Given our commitment to protecting this ecosystem, we would like to explore the possibility of collaborating with organizations or partners who are interested in supporting biodiversity conservation efforts. Due to our current financial limitations, we are seeking guidance and potential collaborations to help maintain and protect the area sustainably. Could you please advise? There are 4 questions. First, is it possible to establish a collaborations or partnership for the biodiversity conservations in this area? Second, what type of organizations or stakeholders are usually involved in such initiatives? Third, what are the initial steps we should take to begin this process? And the last question is, are there any funding scheme, grants, or conservation programs that could support this kind of initiative? Okay, so maybe Shivani, do you want to share your thoughts?
Thank you, Meeta, and thank you so much for this question. I can speak to 2 points in this. What kind of organizations are looking into these initiatives, and what are the initial steps that we can take? Starting with the initial steps, of course, it's very important to have a theory of change, which basically means what do you want to finance, who benefits from it, how do they benefit from it, and how you will conduct that process across many years. Especially with your biodiversity intent, there is a huge also element of community in that, not just for people that are working in this working for this project, but people that will be affected by the 20-hectare area that you have and that serve you as part of your employees and supply chains. I would highly encourage you to not just have a green angle, but also have a social and orange angle to this, seeing how you can employ more people from the communities that are directly impacted by it as well. When it comes to organizations or stakeholders that are usually involved in such initiatives, I know on a global scale, this may differ in Indonesia, but on a global scale, there is a lot more activity now for biodiversity, for nature-based solutions, and for saving forest areas or trees outside forest areas as well. In Brazil itself, we've seen a forever facility formed to save the rainforests of Amazon. So I'm sure there are other funds that you can definitely look at with these certain tags as well, to see how your particular financing program is differentiated and unique to Indonesia, but is under the certain labels that are being used. And for that, the initial steps again require you to think a little deeper about what would be the intent for this 20-hectare area, what kind of a feasibility study can you do for the area to see how it best can be used for impact for the community and for the environment together. So I would highly recommend a study of that kind. Thank you. Over to you, Joanne.
Yeah, thank you,
Thank you,
Shivani. Maybe Dr. Joan can also share your thought. Thank you.
Yeah, definitely. So Shivani's response is really an insightful one on how to position this for impact, and I totally agree. Building on this, I think coming from the financial angle, first, I think as a project owner will be to ask yourself as to how much quantum is needed and what is the purpose. Because there are many avenues to tap upon financing, and different stakeholders involved depending on your approach to these two variables. So if you're looking for something that it's not a huge amount and your purpose is to really continue the conservation of these protected species, you might be actually looking for philanthropic capital. And that is something you can go to foundations, maybe even family offices to have a look if they want to basically give in a charitable way. But if you are looking for a larger amount and looking to raise money for investments, that's where Shivani's guidance on establishing a framework and impact theory is going to be essential to attract investors. And some of these, you would then have to look at what kind of investments are you raising? Is it equity or are you looking for a loan? But either way, Shivani's guidance on looking at the theory of change, impact studies will be very relevant. Another option will be, again, if the quantum is significant, will be to consider if you even want to tap the carbon markets. So the impact study then will look at the additionality of your landscape. How much are you improving the biodiversity beyond a BAU baseline? Are you reforesting the area as well and enhancing the natural carbon sequestration ability of your area? And if so, and if you can get a certification from a verifying industry for carbon credits like Verra or Gold Standard, there could be a possibility where you're going to be putting up some of your area as carbon credit sales in carbon markets or carbon exchanges. So there's a huge variety of ways and very much alive in terms of sustainable finance markets. Different varieties, different opportunities to look at, depending again on your quantum and what the purpose of your financing would be.
Thank you, Dr. Joanna, for the answer. So, if I could summarize, first, the most important thing to begin this journey is to conduct the theory of change, as Shivani has mentioned, and also as Dr. Joanna also mentioned, that who to partner depends on the scale of the impact you are seeking and what kind of investment you are looking for. So, we're moving to another question. So, During the registrations, we also allow the registrants to ask questions. We received so many of them, and here are a few that might be answered today. The first question is for both of the speakers. So the question is, to what extent is sustainable finance genuinely driving impact rather than serving as a reputational tool for corporations, and how? Maybe Dr. Juan can answer first.
Yeah, thank you for this question. So I think sustainable finance, again, there's a nuanced question again, like how much of it is to drive impact or to serve reputation. I think this goes hand in hand. If a corporate is really serious about sustainable financing, and I think these are corporates that us as investors would want to look out for, they're going to have to drive sustainable initiatives in a way that is inherently connected to their business growth strategy. So be it, for example, launching sustainable investment products that will bring in new money and performance from investors, or companies like trying to do sustainable things that impact their whole business model. Like, for example, a palm oil company installing, the example of the EUDR, installing satellite systems so that they can keep importing to the European Union without penalty. And that could then be a real impact story behind that, because sustainability and supply chain traceability is no small feat. That's something that a company should actually be welcome to shout on the rooftops if they do it well, to make sure that there are no deforestation all the way down to a smallholder farm. That's no small feat. And that also, that kind of traceability will allow them to then stack on more areas that can compound in impact, like seeing how many lives improve, biodiversity safe, and so on. But that will then underpin a real business reason to continue doing this. So I think sustainability, if done well, there's no need to trade off between reputation and impact. If done well, I think both will come hand in hand.
Amazing. Thank you, Ashifani.
Thanks, Dr. Joanne. I think I completely agree with your perspective. In fact, I believe corporations are born from the community and they're for the community. So if you're looking at sustainable finance only as a way to get capital, you're not tapping into the real benefits that this tool investment can offer. It can really strengthen how you climate proof your business, how you climate proof your survival and your profitability and your competitiveness, not just on a national scale, but on a global scale, by keeping your supply chains healthy and inclusive, your infrastructure more climate resilient, your people happy so that they also want to work with you in different capacities. So having a strategy that is closer to home, closer to the business unit, and making an economic and business case for it is the most proactive way to go forward rather than having a tick box approach. The reputational angle does come for it. However, a lot of organizations, because of greenwashing, are penalized because they're not really looking at how they can also save their reputation. So investments and disclosure in that way also do have to go hand in hand. As technical and rigorous you are in making your investments, you also have to be equally resilient, equally methodical about reporting that to your investors and the other stakeholders as well.
Thank you. The next questions would be for Shivani. So the question is, how can companies balance financial returns with sustainability impact when sustainable projects often have longer payback period?
Sure. I'll answer this in three parts. I think the first one is you need to see the value in it. As from the previous question, how close is this mission to your business core strategy? How much does it tie with cost savings, profitability, and a triple bottom line for you in the future? The second part of it would be the kind of investors that you're seeking. A lot of the times, impact investment is looked at as a trade-off between impact and financing and in returns. In that way, the kind of investors that you're looking for need to have more patience, which is why we call it patient capital, that looks at the three dimensions of risk, return, and impact. So you need to see the kind of investor that you're looking for. And again, for that, it becomes very important to triangulate your investments at the cornerstone of what the country wants, regulatory requirements, what the investors want, the international standards, and third, what is your core business strategy. So you don't have to make that trade-off essentially, but you're able to deploy back these financial returns in a way that is truly sustainable and meaningful for your organization and your community.
Thank you, Shivani. The next questions would be for Dr. Joanne. The question is how to accelerate green finance in the middle of geopolitical conflict and trade war.
Yeah, thank you for that question. So I think green finance is actually already accelerating because of this politics and trade war. Renewable energy, for example, is something that countries can produce within their borders. And we're already seeing countries stepping up their renewable energy commitments, but caveating that this is for the long term. Because a lot of the infrastructure is not available like tomorrow over the like a click of a button. Grids need to be refurbished to support renewable energy integration. There needs to be more battery storage in order to deal with the intermittency. And there needs to be a lot more systems testing to make sure that renewable energy it may be fine for general applications, but in heavy industrial applications where you can't have even a 1 second shutdown in a steel manufacturing plant, a lot of these are being tested. But the silver lining is that we are actually seeing renewable energy commitments for the future. So that's a good sign in terms of acceleration in probably the next 5 or more years. A lot more renewable energy coming on board. But the question now is what type, at what cost, and when. But I think because of the war, it's actually giving a push to renewable energies right now.
Okay, thank you. Maybe we can do one last questions for both of the speakers because this is a very interesting question. We have many non-business also joining us for today's webinar. So the question is, to what extent can sustainability be integrated into financing strategies and the enhancement of global reputations in higher education or university in the non-business? Maybe Shivani can answer first.
That's really interesting because generally sustainability is increasingly looked at from a business perspective, but equally important behind that is academic research, and one that Dr. Joanne has also done over the years that actually supports new ways, new innovation, because the market is constantly changing. The way that universities can look at sustainability again is threefold. One, of course, in the methodologies that you teach the future generation, the kind of unglamorous industries also that you introduce them to see what kind of sustainability measures can be done, what kind of jobs can be trained. A lot of the times, the youth of today also has knowledge and skill gaps. So partnering with industry to make sure that the courses that they're delivering are relevant for the industry that their future students are stepping into. The second, of course, would be live cases. In a lot of ways, the industries today need more hands-on help, need eager youth to do live sessions for them or to conduct short-term projects for them, maybe over the summer, so they understand the market that they're stepping in. Increasingly, Gen Z and beyond are also more eager to support climate initiatives, to support gender equality initiatives, and they are the perfect resource to sit at this intersection and take it forward. The third would be in the business of universities itself. A lot of the times you can look at your own scope 1, scope 2, scope 3 emissions as well in how you run the university, in the way that you recycle your food, water, and waste, and see that you can actually reduce your carbon footprint as well and take yourself a higher notch. This will also attract more students, more distinguished speakers to your university. And of course, we're always here in Singapore should you need us as well.
Amazing. So, Dr. Joanna, you may also share your thoughts on this.
Yeah, thank you. I think very interesting question on how this can be, if I'm not wrong, proliferated more in higher education. I think we're seeing a lot of trends where sustainable finance sit quite well as like elective courses. So for students who may be interested in them in terms of like specific modules like impact, in how do you quantify impact, or specifically sustainable finance products, how do you design an investment product, or ESG data, like how do you break it down and use it for real life financing and banking implications. A lot of these are pretty much useful, I feel, for students to go into. And a lot of universities are currently doing it either in an elective mode or holding a lot of professional courses. And I think there is a lot of merit also in professional courses because there will be, like, considering the widespread impact of sustainable investment and financing in a lot of our jobs, energy security, disclosures, actual financing, market making, and so on, infrastructure. There may be an area, or there will very likely be an area where you will cross into sustainability, whether people like it or not, but hopefully more people like it than not. And that will be a juncture where causes, like those supported by the UNGC itself, hopefully will play a part there, where it's not like a semester type of commitment or a master's level thing that you have to get super involved in. But I think sustainable finance can be done on a very practical and executive level as well.
Okay, thank you. So maybe because of the time constraint, we can wrap the sessions. Thank you very much, Dr. Joanna and Shivani, for answering all the questions. I believe that those answers, especially for the universities, can be also implemented in other non-business organizations, especially in calculating their scope 1, 2, and 3 and how they run their organizations. Oke, thank you very much. So, Bapak dan Ibu sekalian, kita telah sampai di penghujung acara pada hari ini. Thank you to all our distinguished speakers and for their valuable insights, and to all participants for your participations. Kami berharap sesi hari ini dapat memberikan pemahaman yang lebih baik mengenai sustainable finance, baik secara regulasi, market, maupun implementasinya. We will have the Sustainable Finance Leadership Program on June 3rd and 4th, 2026, and we have shared the link in the chat box. You can find more about this program, what the program structure looks like, the topics covered, and how to register. If you have any questions, please feel free to email to academy, academy@indonesiagcn.org. To receive the speakers' materials and reading files, please complete the post-event survey using the link on the chat box and also on the screen. This will help us evaluate the sessions and improve our upcoming programs. Untuk mendapatkan materi dari pembicara, mohon dapat mengisi post-event survey pada chat box dan juga di layar. Survei ini akan sangat berguna untuk proses evaluasi kami serta untuk meningkatkan kualitas program di masa yang akan datang. Again, thank you very much for all the speakers and participants. Stay safe and have a great day ahead. Thank you.
Thank you, Mita. Thank you all the speakers and panelists and attendees. Looking forward to see you at the course. Bye.
Thank you, everyone. Bye-bye for a wonderful session. Thank you.
You all in the seminar in June. Thank you. Thank you, Joanne. Okay. Thank you, Shivani.
Mita, I'll leave. I'll catch you up later offline.
Thank you, Puja.
Thank you.